Hey guys, Austin and Jonathan here.
What's up?
And this week we're talking about the difference between pre-qualified versus pre-approved. You've probably heard both of those terms thrown around in the real estate world, especially if you're a realtor. But do you know what the difference is and why it matters? So Jonathan, what's the main difference between pre-qualified versus pre-approved?
In a nutshell, the easiest way to think about pre-qualified is borrower stated information that we're qualifying them off of. And the easiest way to sum up pre-approved is that it's lender verified information. So that's the easiest way to say the differences, but we want to dive a little deeper into them, Austin.
Yep. So with both, these are the things we're going to be checking on whether we're pre-qualifying or pre-approved. We're looking at credit, income, assets, debts, and employment. So for pre-qualifying, we're absolutely pulling credit. We're not just asking them to state what they think their credit is. We're going to actually pull it and see what it is. So we're doing a credit check there. For income, we are just taking what they're telling us. So they say, hey, I have a $100,000 salary. Boom. That's what we're putting in. Assets, same thing here. They're telling us how much money they have. Debts, if they have any other debts other than what shows up in the credit report, we're taking them at their word there, but most of the debts are populating from this.
Mm-hmm.
And then employment, are they W-2 or 1099 or self-employed? What are they? They're telling us what they are down there. And so the pre-qualification is robust, and these are things that we can crank out in a matter of minutes.
Yeah, so we have software that automatically do that with our online app. And
Yep.
so, well, cool. Well, what about pre-approved? So what are some of the differences?
Yeah, so most people, when they ask for a call, they ask for a pre-approval letter. This is usually what they mean. But the difference here is that we're verifying all these things that are stated. Credit, we're pulling credit just like we are for pre-qualified, so nothing changes there. But for the income, we're actually going to verify it. So we've got to fully process and fully underwrite the files that we're doing the pre-approval on, and we're going to be going and getting their income statements, so their paycheck stubs, their W-2s, their 1099s, all that stuff. We've got to get it, we've got to verify it. Assets, same thing, we're verifying how much money they have in their accounts. We're getting copies of their bank statements. Debts, we're verifying what their debts are. And then employment, this is, kind of the driver over here as to, what we're looking at. If it's 1099 or some other form of self-employed income or whatever, we're going to check all that.
Gotcha. So with the pre-approval, this is going through processing, it's going through underwriting, they're doing disclosures, they're allowing us as their lender to verify the information. We're getting verification of employment, verification of income, we're qualifying their income, what's eligible, what's qualified. We have a whole video on that. So we can do this in about a week or two, whereas the pre-qual is something we can do in less than an hour.
Easy.
So we know what pre-qual is, we know what pre-approval is, but how do we determine when you need to get pre-approved and when you should get pre-qualified? What triggers that, Austin?
It's really this bottom one down here. So we're looking at what's their employment. If they say they're W-2 employee, then a pre-qualification is going to be sufficient most of the time. And so that's what triggers whether we stay pre-qualified or if we need to take it another step further. So if they're self-employed or 1099, then we're going to go, okay, let's go ahead and let's make sure that we know what your qualified income is, and so there aren't any surprises down the road.
Gotcha. So if someone has lots of different types of income or has kind of non-W-2 employment, that's kind of a trigger as an agent. You might want to suggest to your borrower, hey, we need to work with Jonathan Austin, maybe get pre-approved while we're doing the home search.
Absolutely. It's worth the extra effort up front to make sure that things can go faster.
Absolutely. And so we just want to end this with just a quick tip. When you have a listing and you get an offer, look at that buyer's pre-qual letter, pre-approval letter. Give their lender a call. You have the right to ask them questions. So what are some things you think they should ask, Austin?
Yeah, well, you should definitely ask, did you pull credits? That's obvious. Some lenders will just type up their pre-qual letter or their pre-approval letter, say that the borrower has been one of those two things, and they never actually pulled credit. So the first thing you need to ask is just checking that you did indeed pull credit. The second thing you need to ask is what's their employment situation? Are they W-2 or are they self-employed? If they say, yeah, they're W-2 and they're pre-qualified, that's good enough most of the time, y'all. But if they say they're self-employed and they're only pre-qualified, you need to take that offer with a grain of salt.
Yeah.
If they've been pre-approved and they've really done a full pre-approval, then you're in a much stronger position.
That's right. So That's pre-qual and that's pre-approval. Obviously, Austin and I are here to help make the determination if one of your buyers should go either way. That's what we're here for. But we want to drop a video to show you the difference. And so like it, share it, comment, and peace out.
Adios. Woo. My shirt's not like.
You're good, it's rolling.
And what we want to know, or we want, blah, blah, blah. How did we want to start this? Hey guys, Austin and Jonathan here, and this week.
Why
I don't know what I